Alright, what is going on, everybody? Hope you guys are having the best freaking day of your entire life. So in this video, I'm going to break down how I made $4,648 in probably about 90 minutes of trading. Now, I'm going to give you the strategies. I'm going to show you why and how I entered. And again, some people actually in the comments in the last few videos were like, oh, you need to change your accent. You're trying to put on an accent. No, I'm not. This is me, all right? Second, who can confirm that you're actually taking these trades? Maybe you're just making a video. Bro, I trade with like 500 people watching my screen in the real time. All right, all my students are watching my screen in the real time. I'm pretty sure if I'm just making it up, all my students will be like, "Hey, bro, you never called out these plays, and now you're saying that you entered here and entered there." You see what I'm saying? So, hey, all these people took these trades with me, and I just come here to give you the sauce. And for all the people who are naysayers, man, you want to watch the video, or you can F off. I don't care. But you will learn a little bit if you watch the video. That's all I say. All right, I've been doing it for a while. You learn a little bit if you watch these videos. And the big reason why I make these videos is just keeping it real. The big reason why I want to make these videos is I want you to make enough money from my free content, and then if you want to really, really level up, then you come and we do, you join the K Capital University, the university that I put together that goes for about 6 months. You join that and I'd really, really take you to the next level. But initial money, the trust building phase, you'll watch my free content and you'll start making money. My free content is better than everybody's paid content, and 100%. Right? That's a big reason why I make these videos. So you watch the free stuff, you start making money, and then you're like, man, I really want to take this to the next level. Sweet, I got you, bro. All right, but enjoy the free content if that's what you're here for. All right. So let me break down how I made $4,600. The first trade that I took was on Nvidia. So let's go over Nvidia Trade, and what I'll do is I will go and do the replay feature. Okay. So before we even do that, before we even go and break down the exact charts and the nitty gritties and the strategies, I really want to break down this one most important thing, which I believe is one of the most important things, because as a day trader, you really want to know how to actually trade. All right, how to trade. What that mean? In order to trade, you need to understand, as a day trader, you need to understand time frames, because time frames is freaking important. If you don't know time frames, man, if you don't know what time to actually trade on, I mean, it will always be a guesswork. So what time frames do I trade? So at the market open, 9:30 Eastern time, and the market opens to 10:30, actually to 10 o'clock Eastern time. So first 30 minutes, okay? First 30 minutes, I am on 2-minute chart, okay? Then from 10 Eastern time to 11 Eastern time, I am on 5-minute chart. And then from 11 a.m. EST to 3 p.m. EST, I trade 10-minute chart. Sweet. So 2-minute chart, 5-minute chart, and 10-minute chart. This is how I trade. These are the time frames that I watch. Okay? It's very freaking important for you to know how to actually trade these time frames, of course. But these are the time frames. Strictly, as soon as 11 o'clock hits, if it's 10:59.42 seconds, I'm waiting. Sweet. I'm still on 5-minute. As soon as 11 o'clock hits, I am jumping on a 10-minute chart. Doesn't matter what's happening. Doesn't matter how beautiful setup looks on a 5-minute chart. No, I can't trade 5-minute chart as soon as 11 o'clock hits. And this is the mistake that I actually made. I'll break this down on the trade as well. All right, so these are time frames. Sweet. Let's jump to the trade. So the first trade that I took was on Nvidia. This was like, I have a habit of taking the first trade of the day, like first trade of the day with small size. Why? Because I very much believe, from my own past experience, if my first trade of the day is profit, if my first trade of the day is green, I am green on the day. And this used to be the thing back in the day when I was starting out. If my first trade of the day is, green, I'll walk away green on the day. If my first trade of the day is red, if my first trade of the day is in loss, I'll walk away red. Now, I haven't tested this theory out in a long time, but I still have the PTSD from that past, where first trade of the day, if it's green, then sweet. If it's red, then I'll be careful. That's pretty much what I do now as well. So if the first trade of the day, I do with small position size, because if I'm red on the first trade, it's easier to recover from minus $200 loss than minus $2,000 loss. So let's say if I'm minus $200 down, right, The second trade that I take is with the same position size up until I hit the green trade. All right, because the moment you hit the green trade, you set up the tone for moving forward. All right, this very much I believe that you need to set up the tone. Okay, the tone for the day only comes from you taking trade. Now, how you gonna actually manage the risk and on that first trade is by doing small position size. If it's even slightly green, slightly red, no problem. So the first trade of the day came on a very small position size, and that's why I want to break it down. But it was a very beautiful trade. Now let's break this down. Pay attention to this, okay? This is pre-market high level right here. Okay, this pre-market high. You can move it up a little bit. Okay, this pre-market high level. Sweet. I'm still waiting for the market to open. Let's see. The market's opening. I'm on a 2-minute chart. As soon as the market opened, it broke out of this pre-market high. And again, hey, if you're watching this video and you're not actually writing this stuff down, man, these are not the videos that you can watch while sitting on the couch. Probably watch Mr. Beast videos or watch some entertainment videos. These are not entertainment. This is how to get rich. All right. So grab a pen and paper, pause the video right here, grab pen and paper, and actually start writing this stuff down because I'm giving you the sauce. All right. So it broke out of the pre-market high, and as a trader, you need to wait for, like, super freaking important. First, if you can break above pre-market high, okay, that means the stock is a little bit strong. Sweet. Second, as soon as stock breaks out, that's called impulse move. And after every single impulse move, okay, there is a thing called a pullback. Okay, after impulse wave, you want to see a little pullback. Okay, and that's pretty much most of the people enter long here. They will jump in calls here and they'll jump out of the calls here. And then the stock price reverses and they're like, oh my God, man, I entered and reversed and now it's going up. No, it's because you don't understand after every impulse wave, after every impulse move, this is going to be a pullback. You're going to wait for the pullback. That pullback might be coming now. The pullback might be coming in 30 minutes from now. But there is going to be a pullback. And what happens after the pullback? We make another impulse. All right, which is make another move in the original direction. And this is called structure. This is how the market moves. We have impulse, pullback, then we have impulse. This is how the market moves. So now, the third point is confluence. So what's confluence is? Confluence is when there's more than one reason for you to jump into a trade. Okay, let's say if there's a, this is the level that you're watching. There is, like in this case, there's a pre-market high level right here. Okay, and then comes another critical level. There's more than 2 reasons for you to jump into a trade. That means people who trade pre-market high, break and retest are jumping in. People who trade break and retest of open price, let's say, they're jumping in. So this area becomes an area where a lot of buyers are coming in. When a lot of buyers are coming in at the same price point buying, what happens in an auction? There's an auction, man. What happens in an auction when a lot of buyers come in? Price starts going up, right? So prices bounces. So that's where the impulse, pullback, and impulse forms. So what's confluence now? In this case, we have pre-market high level sitting right here. Okay, that's one, because the stock pulled back. That's one. Second one is open price. What's open price? Open price is the first print of the day. As soon as the market opened, the first print, bang, on the chart, that's open price. I usually have it marked on my chart. Like you can see 117.35 is usually marked on yellow. 117.35 is the open price. So I have that on my chart. I have the pre-market high right here. Then I have this green line that you see. This green line is called 8 exponential moving average. Okay, 8 exponential moving average sitting at 117.31. Then this white line is VWAP, 117.41. Now think about it. All these levels, we have what? Pre-market high. We have open price. We have 8 exponential moving average. We have VWAP sitting at the same price point. All right. Now stock's coming back to retest this. Man, that's a beautiful area. You see what I'm saying? Now, if you really want to see my settings of the VWAP, look at these settings. How to actually put this on your charts? You go indicators, search VWAP, you put this on. These are my settings. Okay, make sure it's HLC3. All right. These are the style that I like. Okay. Then comes visibility, and these are the visibility that I like. All right. But this is my settings for VWAP. Then comes my settings for 8 exponential moving average. Let me see if I can click this 8 exponential moving average. I can't. I'm not able to. All right, let's see. Maybe here. All right, this is my 8 exponential moving average chart. 8. Make sure it's close and style. All right, visibility. This is the settings, and now you got the VUP settings. You got the 8 exponential moving average settings, and now pre-market highs right there. And let's see a pullback, and then we saw a little pullback. Look at this pullback started happening. You see this pullback? Now, has it touched the levels that we want to see? Has it actually made a confluence? Like, has it come down yet? No. What happened? Then it did. Look at this. It came down and retested every single critical thing that we wanted to see. Like, we wanted to see a break and retest of the open price. We wanted to see a break and retest of the 8 exponential moving average, VWAP, pre-market high. Now, all these people who trade all these individual things, they are jumping into the trade. And when they're jumping in, all of a sudden, all the buyers want to jump in, and the stock price can, what it can do, it can make a big move up, right? And where do these, what are these yellow lines? These yellow lines are actually hourly levels, and these come from hourly charts in the pre-market, right? So, I'm in the trade, or I'm still waiting. You can say I'm still waiting because the critical level is sitting right here. As soon as it breaks a critical level, so sweet. Anyway, look at this. Bam! It pushed towards the upside. Sweet. Where would the stop loss be? Just below the critical level. So where would the stop loss be? Just below the confluence zone, right? So we're basically essentially risking almost nothing for this trade. You get my point? Now, I'll take a little bit profits at this yellow line. I'll take a little bit profits at this yellow line. I'll take a little bit profits at this yellow line. That's how I trade. Pretty much. It's that simple. All right. Now, what did I do here? I was using all these indicators, but I used these indicators not to tell me what to do, but I used these indicators to kind of see what's happening, and I did what's happening. So it's super important. You can't, indicators mean they're indicating, all right? They're not predicting. It's just an indication. All right, so the price broke out, came back, retested, and we made a big, decent move towards the upside. Look at that. It went towards the upside. All these yellow lines, I kept taking profits, and then what happened? It started reversing, and when it started reversing, it hit my break even on the price. So what that means is, let's say, for example, if my entry was at $1.10, okay, the price went here, $1.30, I took some profits. Price went here, $1.70, I took some profits. The price never hit the next yellow line, right? The price never hits the next yellow line. My stop loss, like after I take some profits, my stop loss goes at the break even. All right. What's the break even here? The entry price that I have on the, let's say if I jump in 10 contracts originally, I jump out 5 here, I jump out 3 here, I'm still holding 2. That means the money from these contracts, it's already in my pocket. Bro, this money is already in my pocket. And like Nipsey Hussle says, all money in, no money out. Once the money is in my pocket, the money doesn't leave. All right. So the runners that I have, let's say 2 contracts that I have, the stop loss is always going to be break even after I have taken some profits. So even after here, I have all the remainder 5 will be a break even. This is called negative risk management. People worry about risk management too much. I worry about negative risk management. Negative risk management means there's no way in the world on this particular trade I'll be able to lose money once I take some profits because this money is in my pocket. All money in, no money out. As soon as it hits break even, I'm jumping out. All right. That was Nvidia Trade. Sweet. I hope you learned a thing or two about this trade. Here, let's have a look at SPY trade now. All right. SPY trade pretty much came like it was a simple trade, just exactly the same way how we had a Nvidia trade as well. And I broke down the structure, how the market moves. We have impulse, we have pullback, and we have impulse. As soon as the market opened, like check this out, market gapped up. This is all-time highs. We're playing around all-time highs. So I'm still on 2-minute chart, but this is all-time highs. After FOMC, it pushed towards the upside. Market's opening quite high, right? And now what's happening here is market's about to open. I'm sitting there, I'm like, yeah, sweet. You know, this is a strategy called sucker strategy, which I'll break down in some other video. But anyway, essentially what it is, after a huge gap up, there's chances that people who have gone long at the bottom, literally people who went long right here, people who bought some calls right here at 561, they are in big time profits. Then $10 in each share in profit. They're going to start taking profits as soon as the market open. When they take profits, the prices can push toward the downside. Why? Because let's say if you own 50 iPhones, right? Let's say if you own 50 iPhones, all right? And now you want to sell those 50 iPhones. That's how you're going to make money, right? If you bought these 50 iPhones for $100 each, and now you have a chance to sell these 50 iPhones for $200 each. Now you come to the market and you're like, hey, anybody wants to buy my 50 iPhones? I'll sell it for $200 each. Think about it. Now, a Joe Schmo who's sitting at home and who's want to sell one iPhone, and he's like, man, I was thinking I'll get 250. Oh, but there's a big order sitting there who wants to sell 200. Oh my God, man, he dropped the price. Does it make sense? If you were a buyer, who would you buy from? Would you buy for 200 or would you buy for 250? Of course, 200. You're like, man, nothing's wrong with it. So sweet. Why would I pay $50 extra? Same thing. So you just taking profits. When you take profits, you just taking profits. Essentially, that's what you're doing. But you're selling your position. And when you sell your position, selling pressure increases and the prices can drop. Because this dude, if he has to sell, he can't sell at 250. He will have to sell at a little bit below you so he can get filled. All right. So he'll try to sell at 190. Then somebody on the other side of the world is like, oh my God, I want to sell first, man. Give me 180. I'll call it a day. Someone's like, give me 170. And what happens is stock starts coming down. And it doesn't mean that I went out and I traded. I should have, but it didn't give me an entry for the sucker strategy, which I'll break down in some other video. But that's pretty much the psychology behind this move. Price started coming down, right? And as I said, I'm a sort of trader. Doesn't matter towards the upside or downside. Once we see the impulse, there is going to be a little pullback. Once there is a little pullback, I'll be able to catch the next impulse. That's how I trade. Okay, so now there's an impulse. All right, I'm still waiting. I'm still like managing the Nvidia trade and playing around that. There's an impulse. Clearly, we have seen an impulse now. What's happening is, again, impulse. We're still waiting for a pullback. That pullback might be now, might be coming in 20 minutes from now. Who knows? But we need to wait for a pullback. And then price made a big move down. And now this is pretty like expected of a stock to kind of respect the pre-market levels. People say don't worry about the pre-market levels because there's not enough volume. No, pre-market levels is the most recent price action that you have had at these levels. So pre-market levels are super important levels, right? This is exactly where price was coming down, exactly where buyers came in and the prices pushed towards the upside. Now, it's exactly the same spot where the prices started bouncing a little bit. When prices start seeing a little bounce, what that essentially means is it was selling off, it started seeing a little bounce. What that means is we started getting the pullback that we wanted to get. And now, if everything went according to the plan, it will pull back, it'll play around here for a minute, and then we'll draw some flag thing, a little flag pattern or whatever, and the stock can continue in the original direction. All right. So I'm sitting there, I'm like, sweet, everything looks good. And then we saw this little move, and now I'm like, okay, this probably is a little flag pattern setting up right here. Now you might be like, bro, but that's an ugly flag. Yes, not the best, not the greatest, but that was a trade, essentially what I was taking, and my stop loss, where would be a stop loss be? This was the trade. At the break of the flag, my stop loss was on just above this particular candle. My profit target sitting roughly around this 1,569 level, actually, because of the 200 moving average on a 2-minute chart. That essentially means I'm risking about 35 cents to potentially make 80 cents. To me, I'm risking $1 to make $2.2. That's pretty freaking insane, right? And now, as soon as it did, and I jumped in the trade, I'm like, sweet, I'm in. You see what I'm saying? It broke the trend line thing, went back, retest. I'm still in the trade, and it made it move down, and it came down, and it came down. It hit my critical level, and I'm like, sweet. What did I say? I took half off. I explained the negative risk management. Took half off. Where's the stop loss? Other stop loss is at the entry price. Where did I enter on the option contract? At the entry price. Now we started seeing a little pullback, and now what happened is I saw this. I'm like, oh, maybe it's holding this ATMA, holding this 200 simple moving average. And if you want settings for 200 simple moving average, these are my settings for 200 simple moving average as well. Make sure this says close. Okay, super freaking important. Now I was like, sweet. This might be a pullback. This might be an impulse, pullback, impulse, pullback. It might be coming as an impulse again. So what did I do? I entered a little bit again the moment it breaks below this 200 moving average on a 2-minute chart. I entered again. But now for this entry that I had, my profit target was next level, which is 566.6. But because I entered again, now my average of the contracts where I entered, let's say if I entered here at $1, here I'm entering again at 120. So my average, let's say, is 110. This is my average. if the stock bounces and goes hits break even, I'm gonna jump out at 110. Just as simple. Why? Because I don't want to. Once the money's in my pocket, once I've taken some profits of the trade, I don't let the trade go negative. That's just me. Negative risk management. All right. And what started happening is we saw a big bounce towards the upside. My break-even price got triggered. As soon as my break-even price got triggered, I jumped out of the trade. Also, I think I jumped out a little bit, probably a little bit late. I kind of was green on this trade, but wasn't green heavy. Because I jumped out because I think I jumped out roughly around here, somewhere around here. But yes, that was a trade. Essentially, seeing a IPI setup, which is impulse, pullback, impulse. Once we got an impulse, there was a pullback coming, impulse, there's a pullback coming, there's an impulse. Now, no strategy works 100% of the time. All we can do is we can give it a shot, see if it works. If it works, sweet, you get to keep the money. If it doesn't work, that's where risk management comes into place. Okay, this was a second trade on SPY, again on a 2-minute chart. Now, I couldn't find a trade up until 10 o'clock, so now we are jumping on a 5-minute chart. So as soon as we jump on a 5-minute chart, we started seeing for trade on Apple. Because I was watching Apple, Apple was pushing. Now, as I said, I'm a sort of trader who waits for a pullback, right? After 10 o'clock, this is where 10 o'clock hits. Boom, this is where 10 o'clock hits. Now watching Apple, I'm like, okay, this is all impulse. Look at this. This is all an impulse, right? What am I waiting for? A pullback. So is the pullback happening now? I don't know. I'm still waiting for a pullback. I saw this. When I saw this particular candle, man, these candles are called doji candles. Okay, what? Doji candles. What's doji candle? When we have price open at a certain price point, buyers try to push the price towards the upside, then the sellers are like, uh-oh, where are you going? The sellers push it down, then buyers pick it up again, and pretty much it's like a tug of war happening, but nobody's able to win this price action. All right. As a trader, you need to be careful about these candles. I'll say it one more time. As a day trader, you need to be careful about these candles. Why? Because price opened here, buyers tried to push towards the upside, they couldn't. Sellers tried to push towards the downside, they couldn't. It's like a tug of war. It's a war happening. All right. And you know how, as a smart person, what can you do is you can just simply wait for one side to win. Be it buyers, be it sellers. All right, whosoever wins, you start putting money on them. Now, because we have been super freaking strong on the day, even if the sellers win, I don't want to put any money on sellers because, buyers has been winning recently. I don't want to put any money on sellers. Not yet, okay? So that means I want to put money on the buyers. But I want to only put money on the buyers if buyers win because buyers are the one that push the price up. But once I see a doji candle like this, I automatically just draw a level. I'm like, okay, I want to bet that the price goes towards the upside. I want to see if the price can actually break out of this area where the sellers came in. Why do you think the sellers came in here? Because that's where the prices got rejected. It was like chilling. Price is like, oh, it's going up. Oh my God. The sellers are like, where do you think you are going? So they push the price towards the downside. So I want to take a bet when we break out of this little range that we have. Once it breaks out, probably sweet. Now, basically, I'm still watching the IPI impulse, pullback and impulse. But now, because of the doji, I want to see a breakout of this. Hopefully, a little comeback and retest and push towards the upside. Why? Because it's a doji, man. Like doji candle. You got to be careful. 5-minute doji, super careful. Let's see what happens. All right. Now, price broke towards the upside. Like, look at this. Price opened, broke towards the upside. I'm like, sweet. The volume is nice. There's more volume on more than the red candle. I'm like, sweet. Let's see if it comes back and pull back and retested this doji or intraday levels. Now, write this down. This is actually a super important point. We have impulse, pullback, and impulse. Sweet. That's working. We have doji. That's working. Also, a thing called intraday levels. Where is the most recent? Have you ever heard the prices break a resistance level and it'll become a support, right? And the most recent level that we have is the intraday levels. This is where the price literally rejected. Now it broke. It could be becoming a buy area. You see what I'm saying? And now what am I doing? I'm chilling. I'm sitting on the side. I'm sitting on the sidelines, and I'm like, sweet. Let's see what happens, right? And Now, I'm still waiting for the IPI, yo. I'm not going to just go long. I'm still waiting for IPI. What does IPI means? That let it have a pullback. Let the candle close as a pullback. And it came back and it closed with less volume than the green candle. That means sellers are not very strong at around this critical level. I'm like, so wait. Let's see if we can break this little flag thing. All right. Or you can even jump in now with the stop loss just below this. Or you can just be like, oh, let me see if it breaks the flag. If it breaks the flag, stop loss right below this can be super nice. My profit target, where do you think my profit target is? I'm going along here. My stop loss is essentially just below this. Like literally below this. Where's my profit target? Is this yellow line. So what am I doing here? I'm risking 20 cents to potentially make $1. That means I'm risking $1 to potentially make $5. Think about it. That's a beautiful risk to reward, right? And I'm sitting there and I went long. Boom, the moment it broke. Bam. Right, I'm sitting in the trade. The moment it hits this, I'm going to take some profits with my break even running as, with my remainder of the contracts running as stop loss of break even. I'm going to trade this. And boom, boom, it hit that critical level. Now, think about this. Hey, if you're my KCU student, you're going to see what's happening here. We have a drop in the momentum. The volume's going down, candles becoming smaller and smaller. There's a drop in the momentum, right? And there's also a critical level. So we have this kind of ugly looking candle at the critical level. And I've broken this down in the modules as well. So what happens? I took some profits. Yes, my remainder of the runners that I have is break even. All right. And what happens? Started pulling back. Then I hit my break even. I jumped out. Sweet. That was a beautiful trade. A beautiful execution. Right. And then comes the last trade, which was a mistake, a blunder that I made on my end. Is there anything that I can do to fix it? No. What should have I done better? Maybe. What happened was I was watching this meta and I'm like, okay, this is a huge, nice move. Let's see. This is an impulse. Let's see. Wait for a pullback. Now, when we started waiting for a pullback, I've lost the track of time. All right. As I said, as soon as 11 o'clock hits, what am I doing? I am jumping on a 10-minute chart. Right. I lost track of time because I'm sitting there waiting for a little pullback. I'm like, man, and it's easier to watch these videos when I'm breaking down in real time when you see the price move like from like literally 547 and now price is trading at 556. Trading is not hard. Waiting for that trade is hard. All right. Now, yeah, I'm really quickly can just go like, oh, look at this. And I can break it down so quick. Oh, look at this. Right. But that look at this was 5 minutes. 5 minutes of you sitting on this chair waiting for the stock to come to you. It's about patience, man. It's about patience. The game is about waiting. All right. And I'm sitting there. I'm like, there's an impulse. Let's see if we get a pullback. Right. And I'm still waiting. There's no pullbacks yet. And finally, I saw a little pullback. I'm like, oh my God, thank freaking God, yo. Thank God I got a little pullback. So I'm like, okay, let's see if it kind of, it's making a lot of wicks on the bottom, right? Initially, I was like, oh, that might be looking a little bit ugly because there's so many wicks on the bottom. Then I'm like, man, all these wicks, think about these wicks as these are buyers. Right? Every time the price started going down, tried to go down, the buyers are like, where are you going? So the buyers started buying every time it went down. So I'm like, okay, this little flag thing, man, if it breaks this little flag thing, I'll put a stop loss right below this. Let me see. But you know the mistake that I made? I went long as soon as it broke. I went long, even though I made money. Bro, I entered the moment this flag thing broke. 557-ish. Push towards, I think I realized this mistake when we were like 558.7. It paid. Not gonna lie, it paid. All right, because I had like Nvidia, that was a winner. SPY, that was a winner. Apple, that was a winner. So I'm coming off the high of this momentum. All right, so I took a few contracts. I'm like, oh my God, this is so nice. And that's when I realized, like, fuck, what happened, bro? 11 o'clock. I'm like, I am still trading on a 5-minute chart and I follow my rules very strictly. When I realized this, I quickly checked the 10-minute chart, how the 10-minute chart looks. And when I looked at the 10-minute chart, I'm like, oh my God, man, you know what's happening on a 10-minute chart right now? It made a little doji and I should have waited for this candle to close above this. As soon as I realized price was trading around this 558.7-ish, I jumped out. I'm like, I'm lucky that it went above the doji. Sweet. I jumped out straight away. As soon as I realized that I have broken my rule, bro, I jumped out. No, if it was not meant to be, you need to get out. You know how sometimes even you have made a mistake where sometimes you'll go long, and you were meant to do only 2 contracts, but by accident you did 10 contracts. Bro, if it's not meant to be 10, you need to jump out of the 8 contracts that you went extra just by mistake. So here, if it's not meant to be, if I would not have taken the trade otherwise, bro, as soon as I realize this mistake, you need to jump out. All right? I'm sure you have done this where you accidentally jumped in bigger position size than you stayed in the trade just because now you're in the trade already. So you're like, oh my God, let me see. No, I don't wait for let me see. If it's not meant to be, bro, you need to jump out. All right? It was not meant to be, so I was like, oh man, let me just get out. So I got out. I made a bunch of money, but that was a mistake. Now, when I made this mistake, man, I realized, man, I must be tired. I was tired. Yes, probably I would have made a little bit more money, but I was tired because I've been watching the market from the last 90 minutes. As soon as it jumped out, I pretty much straight away called it a day. I'm like, I'm out, done. Because I made some money, didn't want to keep playing, and my brain was tired, so I called it a day. But this was my strategy. This was the stuff that I did, and the mistake that I made. Also, let me know in the comments down below if you enjoy these videos, because your 1 second, if you of your day, kind of makes my day. All right, because the big reason why I make these videos is for that 1% of people who are actually gonna do something about these videos and start seeing the results. So let me know in the comments down below if you enjoy this stuff. Make sure, I don't know how the algorithm of YouTube works. I'm just keeping it real, yo. I don't know how it works. I don't know if it's liking the video helps. So why wouldn't you drop a like? Maybe if it helps, it'll help expand the channel. Subscribe to the channel, because there's about, I think 80% of the people, or 80% of the people, the numbers say 80% of the people watching these videos are not subscribed to the channel. So subscribe to the channel, man. What are you doing? Bro, come on. Bro, people who have no idea how to make trading content, all right, and they are called traders, they have about 100,000 followers. And I'm sitting at freaking 11,000 followers, right? 11,000 subscribers. Come on. If you get value from this, subscribe, man. Boost my ego a little bit. You see what I'm saying? Otherwise, I'm like, man, I'm giving so much sauce, and people who are not giving any sauce, they are like sitting at big numbers. So subscribe to the channel. That'll be awesome. Comment. Let me know. And I'm out. All right, I'm out. Peace. Goodbye. Look out for yourself.